Boom, baby, we're live. Welcome to Tokyo Crypto Show Season 2. We're episode 145. We're here at the full stack panel today. Quarter 4 is when Bitcoin roars. And what we're going to do today, guys, every member of the panel is going to give you an individual perspective as to why we believe quarter 4 is going to be absolutely insane for crypto. There are a couple of many bull flag indicators, which means the market's going to go up. We do have a bear indicator or two, and we're going to just cover everything so you can make the decision at home. Us here, just so you know, the panel, we are fully allocated. We are ready. The bags are packed, and we're ready to rock and roll. Things are looking extremely good. I will be playing a 15-minute presentation from MIT as my part, so I think we're going to go around the panel, and I'll probably do mine close to the end. So, guys, welcome aboard. Thanks for being here today.
Yo, good to be here.
Hello.
Absolutely.
So, we're just going to jump right into it. So let's do a quick little run around here. Alex, I just think the most logical thing is to start off with you. You've been deep in the trenches. You know, your health is dialed in. You are so dialed in. I love it. You wanted to take the floor and tell everybody what you think is going to happen?
Yeah, absolutely. So, bit of a pullback this week, but we're still above the lows of last week. It's a question of, are we going up now or are we going up in the next 60-day cycle? I've got some screenshots and goodies from Bob from an update he put out today, so I'll show them up in a second. But we can see Bitcoin is still chilling. It's not doing anything too bad. 60-day cycle, we were expecting a low last week, which we got. So we sort of want to keep above that now. If we want to continue up with a 60-day cycle, we might have the peak here. But
what price do we want to stay above?
Well, we just want to stay above essentially this low here on this candle, which is exactly 59,850. So we're getting kind of close.
59,000 at home for you guys at home. 59,000 is what we're going to stay above.
So let me close this one. Oh, don't do that. And share some more goodies. So this is essentially what we're looking at right now. 60-day cycle. This is from Bob's group coming through. So, you know, day 21 high, we've come down. This little section here is our logical spot for the day 30 low. We've come up higher, but now we seem to be having a bit of weakness. So the question is, do we go up higher, slice through 70, make a new high, and then come down and then election finishes and off we go? Or do we have another deeper drop back down here to test this area before we go? In either case, though, it's looking like we're going to rip and roar. I'll keep going and show you. So we've either got up or we got down and then up. So this is sort of a scenario that we'd like to see, somewhere where we move back up from here. This is sort of a fractal that was taken from this movement here.
You have accepted the truth.
$70,000 would be a great spot for us to hit on about a day 45, which then would bring us down to about a day 60, which coincides with the date of the US election. Funny about that. Now, if we go through here, this is sort of the weekly view. So it's either down here for the election, down here for the election, up here for the election. Who knows? We'll have to wait and see. But either way, bullish thesis still intact. I feel like I'm a bit of a broken record on that, but things are going totally fine, totally great. If you want to keep dollar cost averaging in, go for your life. That's certainly what I've been doing. I'm already fully allocated. More comes by. We just pick up some more because as far as I'm concerned, it's easy money. So 26, this is the end of a weekly cycle, which is about a 6-month period. So this is the end of December, just around Christmas time. So if we do get this eventuality where we go down and we don't make any new high, we continue this pattern of lower highs on the weekly chart, then perhaps we head all the way down here and it's not until the end of the year that we finally get the last low and kick off. Otherwise, say Donald Trump gets in, we'll probably have a good reaction in the markets. It'll probably go up regardless of who gets in, but I think, you know, for the Trump, everyone's very excited. He's got his own tokens. He's got his own NFT line. He's very pro-crypto. So that would definitely give us a nice little punch up. So if this is the 60-day cycle that gets us there and we break the trend and head up, then, you know, you better get in if you're not already in. If we lose here, we come down here, you might have another 60-day cycle, a nice little low. But still, you're sort of playing it a bit cute because we've had about an 8-month consolidation in the last 4-year cycle. We had a 9-month consolidation before it blew off. So we've already had 8. Bob put a picture out on his Twitter just yesterday or the day before, just being like, this looks a bit too good. It's following the script essentially perfectly. So, I mean, if you're just going to get given it to you, you might as well go with it. Another thing is the monthly chart. We're staying well above we haven't closed below, rather, the 10-month moving average, which historically has been a good sign for continued bullish action. So we're right here. We're forming a nice, potentially bull flag. I say potentially because even the best indicators can only be 85, 90% correct. But with the bull flag coming in, with staying above the 10-month moving average, with 8 months of consolidation, with typically in a 4-year cycle, this is when it kicks off and flies, with the fact the price has stayed above the levels required to rule out, the bull market being on, with everyone going crazy about meme coins, with the ETFs out, with just so many different things going by, you can go with confidence. At least I can certainly go with a lot of confidence that we are going to see a very, very explosive 2025, that it's going to be kicking off either now, and when I say now, I mean the next couple of weeks, or it's kicking off about Christmas time. That's when we get our last low and off we go. So regardless of how you're feeling about things, it's a good place to be right now. It's either going up now or it's going up soon. So, very happy about that. Anyone got any other questions or thingamybobs? We've got Solana's been looking pretty good on the charts. Ethereum started to break out against Bitcoin, but now it's come straight back down again. So I'm just looking for sort of an exit for some Ethereum. I'll probably keep some Ethereum, but I'm sort of starting to move it over into other positions.
I think the panel is unanimously against Ethereum, right? I think we just think Ethereum is definitely dead for. Nothing really happening with that.
It's old tech.
Yeah, it's had its chance basically.
Right now, it's just old tech.
If if your crypto hasn't moved now, then it's probably not going to be moving. Yeah.
We'll say against it, but I think it's there's a better alternative or faster hoard that we can get on.
Yeah, and something like Solana, that's where it's got all the meme coins on it. That's where it's got tens of thousands of tokens launching every day.
Did you guys just see the news that the Stripe, the payment processor, selected Solana as their crypto tech?
Really?
Yep.
Bullish.
Yeah, no, I mean, the thing about Ethereum, right? Ethereum is, in every metric that you look at, Ethereum is fucking dead. And I'm going to pull it up right now, okay? The simplest thing, actually, sorry, you have better charts than me. Alex, could you pull up just the Ethereum dominance chart? Because it has just been a trickle downwards nonstop. I'm personally pissed off because I had some allocations. I thought that the fucking Ethereum ETF would do something, and it's clearly not. It is absolutely a total joke. The only thing keeping Ethereum live is previous things built upon it and a couple meme coins, But if you take a look at what Alex just put up here, that's Ethereum.
But we have what's because Bitcoin dominance is easy to get. BTCD. Bitcoin dominance has been rising steadily as well. It's just another thing.
See, that's crazy. Look at that.
You might as well have Bitcoin.
Yeah, go back to the Ethereum one. Just put up the Ethereum dominance.
Ethereum. Oh, here we go. Ethereum dominance.
You can look for the Ethereum BTC chart to compare the two.
Look at that. That is that's not what you want to see.
Yeah, we're flirting right here with lows. We're actually below them right now from June.
And that was bear market numbers right there. That was Ethereum in the bear market. So, guys, what Ethereum dominance means? It means out of all of the money in cryptocurrency, what percentage of it is Ethereum? And right now it's at about 13%. And it's been trending down. It had a boost up there. That most recent pop, you can see that is when the ETF was listed in July. But then right there. But then since then, that just gave people more off ramps. Ethereum is a fucking, just from a common sense perspective, and Adham is down in Panama, so he's dealing with Ethereum in a different currency, and for him to send money, it's so expensive. To send To send $80, how much are you paying, Adam?
Dude, we use US dollars in Panama.
Yeah, sorry.
But
I
yeah,
do want to say that Panamanians have less money, okay? Well, Panamanians have less money than Americans. Okay, there you go. I was trying to be nice about it, okay? So
thank you.
paying the
No,
fees is a lot harder. That's what I'm trying to be nice. Okay.
Yeah, like the average person, unless you're like in a first world country, and even then, Ethereum is just too expensive. It's not so expensive to send a token because that is a pretty simple transaction. Like sending Ethereum will only cost you like $2, which is still a lot. No, don't get me wrong, but when you get into making trades, which is what most of the crypto users will be doing, swapping Ethereum at a low congestion time will still go for like $15 to $20.
Yeah.
When the equivalent in Solana is like fractions of a penny. So
Yeah, exactly.
To send on Solana, it is 0.0005 pennies. So it's a fraction of 1 penny to send it instantaneously on Solana versus Ethereum, which is just so terrible. It is so awful. I am glad that it's dying. It is dog shit.
Something for the technical folks out there is we have, so I've got red, orange, green. I usually put on all my charts. This is the 200-week moving average, 50-week moving average, and 20-week moving average. So for this is the opposite of what you want to see. You want to see the 200 on the bottom, the 50 in the middle, and then the 20 on top. And if you see that, then it's bullish. You want to get in. But this is very everything. I mean, 200 is heading up, whereas the 50 and the 20 especially is just cratering. So if you were to just show this to someone who is a trader, I mean, they've got a zillion indicators, but this is one of them that people would look at and sort of universally agree this is shit. So, yeah. So this is it versus Bitcoin. Right? Doesn't mean it's not going to go up in value against USD. In fact, it probably will, given USD is just inflating so much. But like, you might as well have Bitcoin. So yes, sorry, Vitalik.
Yeah, I think one other point you mentioned is Real John F. Kennedy just asked in chat, isn't there going to be an upgrade to ETH that will make gas fees cheaper? So yes, but that's not automatically good for ETH price, because a lot of people already have some ETH or some ETH dust in their MetaMask from the last bull cycle. And if it gets cheaper to use it, and they have most of their wealth in stables, which a lot of Ethereum whales have, and normal users have on Ethereum, that just means they now need less ETH to do transactions. So there's per ETH per unit, there's less utility for it. And those people that want to do high frequency stuff or want to do a lot of transactions for trading and everything, a lot of them are already on faster chains as Solana, even if Solana might be less decentralized, whatever, they are already using it. So in my opinion, the biggest plus for ETH is that's so well integrated in most products and that there's so much money lying around from the last cycle.
Yeah. I mean, and if you just look at, I'm going to share something as well. So if you just look at Ethereum on the year as well, okay, Ethereum on the year is only up 6% for the whole year. So again, like, and the thing is, Ethereum was bleeding out and dying, and then the news, like here, it was just slowly bleeding out. We had like a little bit of pop with Bitcoin in the summer, but then it died out. And then the only reason it went up right here and almost got up to 4,000 again was at the ETF. But then after the ETF came, it just sold off. And then, like I said, when you understand the tech, when you understand Ethereum versus Solana, I'm telling you, any influencer out there that's saying Ethereum has a future is an absolute idiot. The gains to be made right now are on Solana. Solana is infinitely better tech. It is infinitely better run. Vitalik is a weirdo, guys. I've met this guy. He's a very weird guy. And when I asked him, why should we buy Ethereum? He says, I don't know. I don't care if you buy it or not. I was like, when I hear somebody say that, like, all right, if you meet somebody who's the leader of their movement and they're like, and they don't try to win you over, that's a red flag. That's like, That's not something that you don't want somebody at the helm of your organization saying, I don't care if you buy our product. Like, imagine if you went to the president of Coca-Cola and you're like, why should I drink Coca-Cola? He's like, well, I don't care. Just go drink Pepsi. I don't care. They wouldn't say that. And the same thing for Pepsi and vice versa. So Ethereum is losing dominance on the market share. Ethereum is going down in its BTC share. All the people that are saying Ethereum is the next thing, it's coming. It's not, guys. It's not. And it takes so much money. And the thing is, the average trader does not have money and they do not have time. You can have Phantom on your wallet, on your phone, and do a transaction. And literally, like, if you send a transaction on MetaMask, it's not fast. Ethereum transactions are not fast. Okay. Solana is literally, you send money to somebody instantaneously, 1 second, under a second technically, and then 0.005 cents. So to hold on, like, the thing is, in this market, you can't hope for anything. Okay. And this, I've been hearing that Ethereum is going to do a fucking update to make its gas fees cheap since 2021. And they're just keep on kicking the can down the road, It's not going to happen. The Fire Dancer update is coming out for Solana. When is it slated to come out? Because they did a test transaction. Or they did the test unit.
Yeah, the Franken Dancer is alive on the mainnet. And I think the main Fire Dancer is alive on the testnet. So they said end of the year, maybe possibly spring 2025 for the Fire Dancer on the mainnet.
That's almost here.
Yeah. Not to mention, but even in old man markets, if you bought even a giant company like Meta, you'd be up 85% from a year ago. So despite all like the gangbuster returns that crypto's done for at least the year to date, like, even you could be buying the Mag 7, most of which have market caps over $500 billion, and you'd be up way more against Ethereum. I can't recommend it as an investment either.
Or micro strategies, right? I mean, Jesus, it's almost a triple, I think. So.
Yeah, it's insane.
That was just new all-time highs on that one as well.
There are meme coins out there. Murad just gave a presentation. We're going to probably talk about that next week about meme coins, because meme coins are pretty much the narrative of this cycle. And you can't look at meme coins like a stupid little thing, because these things are making people money, bro. People are printing millions of dollars on meme coins.
Just like you said, right? Just like NFTs last cycle.
Absolutely. And the meme coin craze, I think, was yesterday, like 5,000 or 10,000 meme coins were made on Solana in one day?
I think it was 6,000.
6,000. There you go. 6,000 made in one day. Vitalik is a weirdo, man. And have that guy at the head of the organization that the reason they have the thing is, ETH was first to be number 2 in the market, but they failed to update and stay relevant. And they were riding the highs and riding the glories of 2021. But then when people had all this money in their ETFs, or NFTs, and had all these monies, but the ETH chain got completely congested, and you just took forever and cost so much money to send money. Like, to send $100 would cost you like sometimes $20.
Shut up and take my money.
John, peak of last cycle, I was going to do a transaction of $650 US to do just a transaction.
Yeah.
Holy cow!
That's insane.
What?
There
was a few days. There was a few days where it was about $250 to $650, probably about a week, and I was just.
What they need is a rewrite the code. Remember, it used to be proof of work, right? When they first entered the market, and it's now proof of stake. But now, I mean, it didn't really improve that much.
Yeah. So the problem with Ethereum is it wasn't built to be upgraded the same way like new chains like Solana or hell, even Polkadot. They were built with upgrades in mind, so they have the room for updates coming in. Ethereum was meant to be updated to what we know as Ethereum 2.0 ever since like 2017, and the upgrade didn't even start until like late 2020 and finished, quote unquote, at like late 2021, early 2022. and the promise of lower fees and faster transactions basically never came. So what the Ethereum Foundation basically did is that they just gave up and told people to just use layer 2s if they wanted cheaper fees. No, for real, they literally gave up because unless they like nuke the entire Ethereum chain and start from zero, there's basically no way to fix it.
Yeah.
No, it's like I say, it's archaic, outdated bullshit tech. Maybe down the road they're gonna turn something. I don't know, turn something around, but I don't know. But
I think Ethereum will stay around in the sense that it won't completely die just because it was here early, but it's never gonna be one of the big movers again. Not after what it's shown this year.
I'll tell you something. I have connections to these guys that run like this Chinese OTC thing. Like basically it's a bunch of Chinese guys that I know in Hong Kong and here in Tokyo. And if you want to buy cryptocurrency with cash, you can go to these people, or if you want to sell your cryptocurrency cash, you can go to them. And I asked him, I was like, what are you buying? And he's just like, well, I'm Chinese. He's like, all we buy is Bitcoin and BNB. He said, that's all they buy. Like, so even BNB coin is showing a stronger use case than Ethereum. And at least I like, CZ, he's a decent leader. Like, and the Binance is doing a damn good job, globally speaking. So I cannot, like, I actually was talking to a guy in a consult last night, and he said he has some money in Ethereum. I was like, dude, if I were you, I would sell that shit. The Ethereum is like, because in order, let's talk real quick about, because we're all here to make money, right? Or who's here for the tech? None of us, right? Who gives a fuck? We all want to make money, right? So if you just look at what Ethereum has been doing, right? So a couple things, right? So with Ethereum here, and this is what we're trying to save you guys money by telling you these things. All right. This performance has been abysmal. Absolutely. Like they haven't even matched their all-time high. And a lot of other crypto coins have matched their all-time high. In order for Ethereum to make some, look at, dude, the market cap is pretty low too, dude. 288 billion, still number 2 in the world. But if you're number 2 in the world, you should be competing with Bitcoin. You should be trying to be neck and neck. And slowly but surely, this number is going down. And like I said, I just don't see people coming to ETH and being ETH maxis. A big part of ETH and what's been going on with ETH is the Pepe meme coin. One day last week, Pepe meme coin did more volume than Solana, like in 24-hour volume. So, but that was pretty much the only, that was the only use case that we see. The only big things, like what's a big coin right now that's out on Ethereum that everybody's going crazy about that's not a meme coin?
Yep.
Exactly.
Yeah, basically also the amount of technical debt they have in their code base, because they have so many projects that rely on them to keep everything stable and running, is so big that for just introducing one feature, they probably need 10 times as much developer time as something
Phantom is its own chain there, brother. Phantom is its own chain. So
to get to the same efficiency as Solana or something like that, and they've given up on decentralization too. So this is a meme now on Ethereum, at least in my opinion, with the node operators and everything. So to get to the same point as Solana, they have to put in 10x the development time, and that's just so extremely expensive. And those developers that do it for free, many of them have moved on because they just want to get their project going and choose the latest and most comfy tools to get there.
Did you guys see also, like, I think the price crashed when this happened, but when let me see if I can find it.
The FBI thing?
No, this was at token 2049. Okay. This is the leader of Ethereum right here. Did you guys see this?
Oh, no.
Look.
All the rest of them, it's mathematical. No more double spend, it's encryptable. Put your cash in your brain or it's wearable.
Bullish, he's autistic. Shows how intelligent he is.
He's trying to meme himself up though.
He was singing why people should buy Ethereum, and price tanked after that. So, not a good look. Not a good look. Not a good look at all.
Really quick, real John F. Kennedy. You were saying one of your comments from a technical analysis, sure, but fundamental analysis says ETH is still good, in my opinion. The thing about fundamental and technical is the technical analysis is like the chart should tell you everything. And if the chart does not tell you everything, then that's because there's information that a select few people know that nobody else knows. And they're able to exploit that gap. And that's how you can exploit with fundamental. But we have no access to that, as Steve said in many an episode. Like, there are people who have billions of dollars with teams of thousands of people who spend all their time trying to find that little gap, that little bit of fundamental knowledge that they might be able to overcome. But for Ethereum, and as well as it's such a big thing, it's not like some sort of niche thing that you're going to like find, oh, the founder turns out that he accidentally burned all of his entire wallet, so 30% of the supply is suddenly gone and no one knows for next week, so I'll buy now. Like, we don't have that information. The chart should tell you all the information you need to know, and it's just fallen off a cliff. If you look at Ethereum versus BNB, it's making like it's shooting right up. We've got the 200 on the bottom, 50 in the middle, 20 on the top, price well above the 20. Like, it's looking fabulous on everything versus Ethereum. It's just, you don't be wary if someone's like, I'm a fundamental analysis guy, because that only works if you have some knowledge that the wider market doesn't have, because the wider market should be reasonable until it's not at highs and lows. And that's where you can kind of explain. And that's what we've been trying to do. We're sitting here going, we expect, because of the timing of the 60-day cycle, because of the weekly cycle, because of the 4-year cycle, because of the ETFs, because we expect that next year should be very positive and we should make more money. And the price is fair today, but we believe it's going to be higher next year. And that's where we sort of come out with it. And we can see technically that building and that base building. So you have to take technical into account. You can't just, I think Miguel famously, our dear friend, is always like, I'm the fundamental analysis guy. He's just got no idea what he's talking about. He's got absolutely no idea what he's talking about.
Retard alert.
So you got to take the technical into account before you start looking at the fundamental. And
us here, remember, we're like, you guys see, there's only 6 of us on the screen, but we're actually part of a 15-member research team that's been together since December. So, and one of the things when I was the head of this team, I said, no hopium, no hope, no cope, nothing. Pure math, pure data. That's only thing we're going by. And I'll know somebody, MC, he says, do you like Gala? At the beginning of the year, actually, Steven ran the head of the research for Gala, and he gave the veto on Gala going into this upcoming bull market, because, we were started like looking at data from previous years, and we're like, okay, maybe Gala can do something. But the lawsuit, all the infighting, all the trash that's going on with them, and if you look at Gala's performance this year, absolutely abysmal. Absolutely abysmal. If I were to invest, I'm going to pull up the chart right now. Okay. I'm just going to pull up the year chart to show you year to date. Okay. Looking at Gala. So you could see right here that it was just awful. 2 cents. Okay. It peaked out at 8 cents when Bitcoin went up. But before that, it was just pitter pattering around 2 cents, 3 cents, 2 cents, 3 cents, and just died off. And then now it's just dying off again. And then if you go down, I mean, the all-time high was, all-time high was, 8 cents in November 26, 2021. So they're clearly not doing anything. And another thing is this, let me guys say something, okay? Anybody who tells you crypto gaming is going to be something is an idiot. Crypto gaming is dog shit. Crypto gaming is dog shit, okay? I have a PS5. I have a tank of a computer. I have an RTX fucking 3090, 40, whatever the newest one is. I have that, okay? I don't need to sit here and play some pixelated dog shit and be like, oh, I'm going to make some money. Like, no, I don't care. Crypto games are all garbage. Every single game that came out has been shit. Illuvium is shit. Polymos is shit. Gala is shit. Shrapnel is shit. Please show me a crypto game that you sat down and got lost in, because it's not there. Traditional gaming is light years better. Go ahead, Adam.
I made a game once and it did good for like 3 weeks and then it died. So yeah, I can attest from the developer standpoint, crypto gaming is fully dead.
But end of last year, we did have, there was a few, I mean, Alex Becker was big on crypto gaming as well.
Dog
and
shit.
We had a view that maybe crypto gaming was going to be something big this cycle. We had a fundamental. We thought fundamentally it might be good, but the technical played out, and we went
the whole team look at the gaming sector, and we picked like 1 out of 5, right? Something like that, guys. Half a dozen. We picked one maybe. Then we didn't see the performance following a few months. So we pivoted more towards a meme coin instead of staying with the gaming. We think the memes are going to be what's going to be hot this coming cycle now instead of gaming.
Yeah, we have a gaming tester on our team. His name is Derek, and he downloaded Shrapnel. Shrapnel is supposed to be like, oh my god, Shrapnel is this like amazing first-person shooter. It's the next Call of Duty, and here we are, 1 year out. Not even a year out. When did it launch? November 11th. We'll just say that. November 8th. Start out 10 cents, and now we're at 4 cents. So once again, crypto gaming. Sorry. It's not happening, guys. Listen, if you want to make money in cryptocurrency, you cannot be like, this thing is set to launch, bro. This is taking off, man. This is the next wave. No, it's not. It's not. I assure you it's not. Crypto gaming will probably be amazing in like 30 years when the tech can finally catch up. So we'll be back in Tokyo Crypto Show episode 1568 or something. I don't know. We'll cover hit that subscribe button. Don't lose that episode. But as of right now, it's not going to happen. I'm sorry. It's not going to happen. Like, again, the 2021 bull market made investors way smarter, okay? Because so many people got burned on hopium. Crypto gaming is this, Ethereum is this. It's not. I'm sorry to tell it to you, it's not. Jupiter token has been outperforming all of these fucking coins, and Jupiter is just the DEX for fucking Solana. So no, it's not coming. Like, you guys, like, I know we're going to talk about I think we're going to officially talk about meme coins next week, because the meme coins, the thing about meme coins, and we're going to go back to today's episode topic here in a second, but the thing about meme coins is it's pure. They're like, yes, this is stupid. No, we don't have a white paper. It's a cat that pops, and we think it's going to go to $10 billion. Like, that's just the purity of the stupidity is way more trustworthy than a guy who hires a bunch of team of fake devs, hires an Indian guy to fucking write some complex white paper that nobody reads, hires a fucking marketing director who's like cute and has big boobs, and nerds will fall for it. It's just, people get burned and burned and burned and burned. And the more people you burn, the more they learn. And the more they learn, the more sophisticated the market has to become. So here we are. Next is Steve. Steve, you're monitoring the stock markets. You can tie it to Bitcoin if you can, but I mean, the stock markets have been doing pretty well in regards to a lot, right? Go ahead, take it away, Steve.
A lot's been going on. I don't have the biggest update based off of what happened before, but recently, the most recent jobs report came in way past expectations, north of 100,000 jobs added beyond what market expectations were. This upcoming jobs report might be a little bit worse because of these hurricanes going through Florida and North Carolina. That will lead to layoffs. That will lead to some people, not able to go to work, and less economic activity there. So those reports might be coming a little weaker, but the ones after, I am not bearish on. I still hold the same long-term bullish view as before for the same exact reasons as before. If you believe in the advice that crypto follows the stock market, then this would just be one more reason to be bullish in crypto again. Yeah, not a lot to add this time.
The S&P 500 has been doing good. Actually, Bob Lucas posted this. I mean, it's like, shout out to fucking Joel Littman, because he just harps on about the S&P 500. But like he says S&P as clean as it comes, continuing year of clean cycles, fantastic setups. The easiest money to be made in the whole world is just to buy the S&P 500 every year and just put money into that.
Oh, could I jump in real quick?
Yeah.
There is one thing that I do want to say is some people have been mentioning in the chat and earlier in these conversations that people have been mentioning how all-time highs set in 2021 and that general period have not been beat yet in the current bull run. There is a good reason for that. Back during that time when they were trying to bail out the economy, they were releasing all the stimulus at once. They cut the interest rates nearly as low as possible. They made those huge spending packages. Everybody got their $600 stimulus check. This time, we don't have all the instant stimulus going right into the market. So just because a coin has yet to beat its all-time high and a couple years have passed, that's actually to be expected here. And this bull run will be longer than the one that came in 2021 is my belief. It will be slower than the one that hit in 2021, but I do think that it will ultimately be bigger than the one that we had in 2021 because of this big interest from these investment banks like BlackRock, Vanguard. We still have a lowering interest rates environment. The global economies have recovered higher than they were during COVID. Interest in crypto and the average layman's knowledge surrounding COVID. I mean, crypto is better than it was before. So for these various reasons, and of course the liquidity cycle, I still reiterate this bullish position. However, the bull run that we are going to have this time around is going to be slower, but ultimately I think larger than the one we saw in 2021. Yeah, wanted to add that.
Okay, good. James B., TradFi expert, adding on to what Steve had to say. What are your thoughts on Bitcoin, the markets, and all that?
Give me 1 second here. Let me share my screen. Okay, let me share this guy's first. Can you guys see the screen?
Yes, we are right there.
Citadel Securities. So these guys, Citadel Securities, they are one of the biggest market maker in the world, right? They do almost $500 billion of
Holy
trades
shit.
and liquidities per day, right? And they handle 35% of all the retail trading volume in the world, right? So you're talking about one of the biggest, the market maker for the US and the equity markets. And now one of their research has came out. Let me see here. Give me 1 second. Let me stop sharing and share the other one. Here, we can share this. Okay, can you guys see this? Let me play this.
Hedge funds, asset managers. You have about 150 clients here, hedge funds, asset managers, institutions, central banks, a lot of central bankers, even former politicians here today. How has Citadel Securities grown and evolved? This used to be a company mostly known for equity market making, but very noticeably.
Really is. The focus for us elsewhere in fixed income, the focus.
Make it full screen.
Really, the biggest evolution for us as a franchise has been that deepening of relationships with exactly those clients that you mentioned, where that they really
inflation print, presumably the next big markets in the marketplace right now. And we're less than 24 hours, as I sit with you today, from that next inflation print, presumably the next big market moment.
Yeah.
What is your expectation?
So it's quite interesting because the market had shifted all of its focus and really all of its vol expectations into the payroll reports going forward, with an expectation that they would be weak and it would sort of force the Fed to be more aggressive than maybe we had initially thought. Now we've seen a quite strong payroll report last week, and the attention now turns to inflation once again, where you say, well, the growth dynamic now looks pretty solid. Do we have to be concerned about inflation maybe not getting to target? How does it change the Fed reaction function? So for tomorrow, we're looking for a print that puts core in the high 20s, gets you to an inflation environment around 2.5–3%, still well above target, and still leaving the Fed with a dual mandate to manage.
Well, so what does that mean in terms of your expectation for how much the Fed can cut rates this year?
Yeah, so right now we see the market, and it's repriced materially, but we're still implying 50 basis points of cuts for this year. And I think when we look at it, whether it's the strength of the underlying economy or the stickiness on the inflation front, that feels a bit too high. So I'll go out on a limb and say we only end up seeing 25 basis points of cuts again for the rest of the year.
That's a call. And it's interesting, you have seen more folks turn tactically
on the very short end of the curve.
So what this guy is saying is that, give me 1 second, let me stop sharing.
I got you. I pulled it off.
Okay. What this guy is saying is that they think that inflation is still sticking around, but now they have this, the Federal Reserve have dual mandate, supposedly, right? They have to manage the inflation to make the goods and services affordable for the public while keeping the job market healthy, keeping everybody employed. Well, they think the inflation is still sticking around. That's what he thinks. But the Fed has second mandate to keep everybody employed, which is, looking kind of bad. So what he's saying is that, hey, they're going to have to kind of balance things here. And kind of what Steve was saying, that, hey, some part of the economy is not working, obviously, right? Especially with this hurricane thing, that would give Fed reason to cut the interest rate rest of the year, but it won't be as big as people expecting, right? So the liquidity is coming in, but like what we were saying, I think it's coming in at a much slower rate than what we were expecting in the beginning of the year.
Mm-hmm. So going back to Bitcoin, I'm just me, right? But I think they're going to cut rates every month until the end of the year. Personally, that's what I think. I'm not the head of Citadel, but I just think that just the way I predicted that they were going to crank rates up every month in the month of 2020 or in 2022, which they did, and we haven't had these rates high. We haven't had this rates high in how long? When was the last time the rates were at 4 or 5%?
70s?
No way. Are you serious?
It's been wild. It's been decades, though. It's been decades, like 30 or 40 years, man.
I think the 90s. I think the 90s. I could search it up.
Yeah, I'm pulling it up right now. Okay, so let's just go 10 years. Oh, wow. It's further than 10 years. You're right. Okay, yeah, here it is. So these are the interest rates, guys. So the problem, here's the thing with interest rates. Interest rates is the percentage of interest they have to pay on the money that they print and put into the system, right? So we're here now at, well, we just got down to 5.13. No, we're at 4.8 right now, right? It's like 4.8, yep. I believe. The last time we had them this high was during the financial crisis right around the financial crisis, which was 2006. And then before that, it was in 2000. And then, yeah, in the 90s pretty much. And then right here is when they crashed them pretty much down to zero. This was like the best time to buy houses and make all the investments in the world. You can make all the money in the world here. And then they started raising in the beginning of the Trump administration. And then during C19, it crashed down to zero because, of course, it needed to. That's when all the money came in the market. And then here we are heading again. And that's why people have been having a lot of economic troubles, because this is making money harder to access for everybody. And when there's less money in there, yeah, you control inflation, but the economy suffers and the people suffer. But like I said, people who think it's like all doom and gloom, like in the 80s, we had like, look at this interest rate, 19% interest rate in the 80s during the great economic crash over there. That was terrible times. So we kind of got spoiled here. This is why I think kids that were raised in this time here are like so entitled and bratty, because they had good living from 2009 to 2016, basically. It got a little tough around there. But I do think that these rates need to aggressively come down. And like I said, I think if Trump gets in office, he just wants one thing and one thing only. He wants the economy to do better for the people. That's his whole campaign, his whole campaign. And he's talking about he wants to eliminate taxes on us over here, overseas as well, James. So we don't have to pay fucking double taxes to America, and I have to pay taxes to Japan. So that is going to be a big break, because then if I have more money, I can hire more staff. And then when I hire more staff, those staff are American, and then those guys get more money. I could give my staff pay raises and stuff like that. But when the economy slows down because of these interest rates going up, and it just causes trouble for everybody. And, the people at the top, they don't suffer, right? Because they're all just, the politicians are rich no matter what. Economy up, economy down, they're fine, But other than that.
We should look at also not just the absolute level of interest rate, but the movement, right? Just like you were saying, is it going up or down, right? So if you go back to the chart, what we kind of saw since the 70s, 80s was relatively the interest rate dropping, which is inverse of the stock market movement, right? The S&P 500 just kept going up and up and up because money was coming in where it was cheap to borrow money. But since after COVID-19, they start raising the interest rate, right? So the money got tighter and tighter and tighter. So we should always look at the level of interest rate as well as the change, right? Is it going up or down?
Mm-hmm. Yeah, it's it's a lot of trouble, man. It's the to sit here and just say like the economy's good and that the government's doing a good job. It's the absolute peak of cope. Next up, we have Elias from a miner's perspective. Elias has been all around the world this year, literally building mining locations and scouting the world. So you mentioned to me that miners pretty much are only going to be making a profit when Bitcoin is at $70,000, correct? Something around there?
Yeah, pretty much. So I've prepared one quick thing to show all of you. Can you see this map?
Yep.
Okay, perfect. So this is basically an estimation where how much hash power is where in the world, so located. And right now the US is at about 30 to 40%. Then comes China at about 20%, and Kazakhstan and Russia and Canada following it between 5 to 10%, more or less. So the big two players that control 50% of the hash rate, so have 50% of the hardware, are the US and China. And this is just came out is an electricity cost map of the whole world. And it basically shows, based on the average mining performance of the machines those miners use, how much does it cost in electricity to mine exactly 1 Bitcoin. And I think the US in this map, it's a bit too high because a lot of miners have their own solar, whatever, but it's basically right. So the US is at about 100K, China at about 50K, and you can ignore Europe, but Africa and parts of South America, as well as Northern Asia with Russia, are between 20 to 30K per Bitcoin. So it goes 30K for those places with low electricity prices, 50K for a lot of miners in China. There's even more than publicly known, because it's officially more or less banned there. And then about 100K in the US, even though it could be something like 90K with the big players. And this is also reflected in this chart, which tries to average out the worldwide cost to mine 1 Bitcoin with the basically only the electricity cost, and the current number for this chart is 75K, about 75K right now. And this is extremely important for miners, the electricity cost, because this is their biggest cost overall. So if you're in the US and let's say you have a good electricity price for the US, you'd have something like 7 cents per kilowatt hour. And this is one of the latest miners. This machine came out in February 2024. It's extremely widely used. And currently, all of the Bitcoin you make with this machine each day at the current prices, you'd pay over 60% of the profit you make for electricity. So if you go up to 10 cents, you're at nearly 90% electricity cost. And this is not counting in employees, all the other costs. So to come to a conclusion for this, the point why it's important for Bitcoin and for the Bitcoin price is that a lot of smaller miners don't have the good electricity prices big miners have. So they have, just to not go bankrupt, they have to sell off the Bitcoin they mine daily. And a lot of them have bled out and went bankrupt or got bought up over the last months, basically since the halving in the beginning of Q2. And the big ones, they don't need to be selling Bitcoin. So basically, the idea is as soon as smaller and mid-sized miners hit this 60, in my opinion, more of a 65 to 70K mark in Bitcoin price, they don't have to sell everything anymore, because the plan for miners is also to collect as much Bitcoin as possible and try to sell at the top so they have enough money to get through the bear market, especially if they are mid-sized or smaller. And so what does this mean for Bitcoin? Basically, as soon as we hit something like 70K here in the current chart on the weekly, it should be about here. So the old top back from March, there's a lot of selling pressure that just goes away. And this would pump up an exponential movement even more.
So take a look here. I'm gonna go next to add on to that because I have a quick presentation, and it's about 15 minutes long, but I want to show you guys because it's super important. This was given by Jesse Meyer at MIT the day after the halving. Okay, so this explains why mining is important here, and I just want to play this in full so you guys can fully understand why on October 20th, it's the official 6-month mark after the Bitcoin halving, and that is when equilibrium is achieved regarding supply and demand. So take a quick look here. It's a little bit long, but I'm telling you it's worth a watch.
What is the halving? All right, so yesterday we had the halving. This is the screenshot I took on my plate here of mempool.space celebrating the halving. That's that yellow block. That's block 840,000. And that's a big event. That's very special for Bitcoin. It's our 4th halving in 15 years. And it's the beginning of the next era for Bitcoin. The next 4 years will be the 5th epoch for Bitcoin. So where are we as we begin the 5th epoch for Bitcoin? Well, we are here. We are $1 trillion asset class, more or less, in a $900 trillion global asset ocean. And how did we get here? And where will we go from here? For me, it's all about the halving. So this is Bitcoin's entire monetary policy, this expression on the left. We're at MIT, so we're going to go into some of the math and the details a little bit in this talk. This is everything for Bitcoin.
So I'm just going to make it real easy. As soon as Bitcoin came out, every time a block was mined, which means you have a bunch of computers filling up these little blocks of information, explaining person A sent Bitcoin to person B sent it to Z, Z sent it to X, Q sent it to Y. And once that block gets filled up with data, 50 new Bitcoin are released to the ecosystem to the miners. In 2012, the first halving occurred. So now the reward is now 25. 2016, when that same amount of information was computed, 12.5. And then 2020, it got cut down to 6.25. Now we're down to only 3 Bitcoin being added to the ecosystem per block being mined. And the difficulty of calculating the account history of person A going to person B, C going to D, D going to F, F going to Y, Y going to X, whatever, it becomes more difficult to calculate these things. It requires more electricity, like Elias was just saying. So as the supply gets lower and lower and lower, the demand exponentially goes higher. I'm just going to skip the code part here because it's just too complicated.
Have this in terms of for blocks for the next 210,000 blocks. So this is where we are at in terms of Bitcoin's overall supply issuance over time. This is a chart I got from Pierre Rochard and added to it. You can see this asymptotic line going up and to the right. That's our supply currently in circulation. And it approaches that 21 million flat line. So in that sense, you can see how the supply issuance is slowing down. We're experiencing increasing scarcity of new supply.
The yellow,
and that's what the orange bars show. So in the first era, 50 Bitcoin of subsidy per block, then 25, 12.5, 6.25. You can see that exponential decline. And it is approaching zero and will effectively be zero in, depending on how you look at it, in 12 years. So that is Bitcoin's supply issuance schedule. It is increasing scarcity of new supply issuance, terminating in absolute scarcity. And that's huge because that's never been possible before in the physical world with any asset. You can't have absolute scarcity in the physical realm. You can only have that in the digital realm. And Bitcoin is the invention of digital scarcity and the simultaneous invention of absolute scarcity. And that's a huge deal for assets. This halving is also exciting because yesterday, we just got better than gold in terms of our supply issuance per year. And that makes, you can see that drop right there below the blue line that is gold. And that means that Bitcoin now is a better store of value asset than gold. And if you remember the chart earlier, gold is a $12 to $16 trillion asset. Bitcoin right now is a $1 trillion asset. So that's a 10 plus X to match gold. And in my opinion, the only reason we haven't done that yet, and maybe we don't do that over the next 4 years, is because people are still catching up to what Bitcoin means and why it's an attractive asset to hold. Okay, so taking it back a little bit here, Bitcoin's entire price appreciation story to me is about supply and demand. And so here's your classic supply and demand, your Marshall Cross, this Econ 101 stuff. And price is set where supply and demand meet. But Bitcoin is different because Bitcoin has completely inelastic supply. Its new supply issuance doesn't care how much supply the market wants. It's going to produce what it's pre-programmed to produce in any given 4-year period. And then it drops. So the supply created shifts every 4 years. And obviously the intersection with the demand curve changes and changes again, and will keep changing. This, of course, is a bit of a static view, and it doesn't take into account all the external variables of how demand might shift, probably lateral shift, as more and more people learn about Bitcoin and realize they want to include it in their portfolio, and it becomes de-risked from a geopolitical point of view as well. But the point here is that you can see that in a vacuum, that where supply meets demand on the y-axis goes up as the amount of Bitcoin being produced decreases. So to take a different lens of the same idea here, this is where we've been for whether or not you knew it for the last 30 days. Based on the current market price of Bitcoin, all else equal here. So this does assume that supply and demand have been in balance for the last month, but that happens when the price goes sideways, all else equal. So for the price of Bitcoin to go sideways, there needs to be enough net inflowing demand to absorb the newly created Bitcoin over the course of that month from mining. And at current prices, the amount of Bitcoin being mined for the last 30 days was $1.8 billion worth of Bitcoin. Price has gone sideways. That meant that there had to have been $1.8 billion of net inflowing demand. All else equal, there's a ton of noise here, but these are the core mechanics. That's the last 30 days. The halving happened last night. What does it look like going forward? What's the next 30 days? Because of the halving, there will only be $900 million of Bitcoin produced from mining over the next 30 days. But that doesn't mean that demand will drop by half. Ostensibly, it'll remain the same. And then you have a problem. You have a shortage. You have a supply shortage, and that can accumulate into a supply shock. So bear with me here. We're going to get into kind of the mechanics as I see them of why the Bitcoin halving drives a major bull market over the ensuing 12 to 18 months. Okay, so this is right before the halving. We have that supply and demand balance. The amount of new supply, the orange block there, is equal to the amount of inflowing demand. You've established price equilibrium between supply and demand. At any given time, there's a certain amount of Bitcoin that's available for sale. 5% of Bitcoin has moved in the last month, typically. So that's the size of that box relative to the whole circle is the total circulating supply of Bitcoin. Not all of that is available for sale. So what really sets the price is what's available for sale. And we'll see how the mechanics here play out. So this is before the halving, then the halving occurs. Not as much supply is being created, but just as much demand is coming in, and that starts to chip away at available for supply. 3 months later, you've eaten a little bit of what was available. And then that continues. The price has to, as the amount of available for sale supply starts to shrink, the market has to find more supply. The only way to do that is for the price to drift upwards in order to induce holders to become willing sellers. So the price starts to drift up at this point, and then keeps drifting up. And as it keeps drifting up, more demand comes in because people get excited. Why is the price of Bitcoin, why does it keep going up for the last 6 months? I want in on that. It's going to keep going up. I want to buy more. So now you're suddenly eating bigger chunks. Granted, you're also starting to inspire some long-term hodlers to start selling some supply. But this starts to accelerate. the imbalance starts to accelerate. And now you've really reached mania conditions where you're chewing through available for sale supply because of the imbalance of demand versus supply from mining and supply from hodlers becoming willing to sell. And what we're talking about here is a development of mania. This is what mania looks like. And that's a bubble. And that's the reality of what a Bitcoin halving creates. It creates the conditions for a bubble over the next 12 to 18 months because of that accumulation of the supply shortage, a supply shock. And that's been the story of Bitcoin. If you really want to take out the noise and look on a log chart at the Bitcoin price over time, it looks more or less like this.
Now, I'm just going to break this down real quick. So you see, we'll just look at, we'll go to the best one. So it's 2020. You can see my cursor here over 2020, right? So that's where the halving occurred. And then the price about 6 months later started to go up, but then it starts to overcorrect, which means it goes up higher than it should be, which is about 66,000. And then it crashed down to about, what was the low? About 15,000, 20,000, somewhere around there. And then it slowly finds equilibrium right on time for the 2024 halving. The only difference with this time was that we had the ETFs, which kind of pushed it to a new all-time high above this. But other than that, it kind of came back down. And then now that the supply is permanently reduced, the demand is inevitably going to go up, and it's going to be reflected in a price. And this takes about 6 months for it to be realized in the marketplace.
And that would be like late October.
Right. 6 months is precisely October 20th, I believe, because the 420 was the halving, right?
Okay.
Which is pretty lit. But yeah, then 6 months later, we have it at the approximately the 20th, which is in about 10 days, give or take from now, maybe a little bit more. But there's more compounding factors we're going to add right after this. This is the first section of my presentation as to why I believe this is a bullish case here.
It's because we have these vertical points in time where supply, demand, price equilibrium is upended. And then the Bitcoin price, the market, has to go through a process of reestablishing equilibrium. The price has to drift up. People get too excited. They overextend themselves. It turns into mania, turns into a bubble, goes higher than it should have gone. And then the reverse action happens where there's a crash on the backside. But it ends up finding some equilibrium just in time for the next halving to arrive, to upend that supply, demand, price equilibrium again, and the process repeats. The key about these bubbles is that the conditions of the bubble, the condition that created the bubble, is not undone by the bubble running its course. So there's less Bitcoin being mined after the halving, and that is permanent. So you don't go back to the conditions that were before. And that's the major difference between Bitcoin's bubbles that are permanent and cumulative versus something like a tulip mania where there's nothing stopping you from going back to prior conditions. So this is what we've been living through, and those mechanics are still there for the halvings. The halvings will keep happening every 4 years, every 210,000 blocks, and price will continue to react to it in this very organic, inevitable sort of pattern. What this amounts to, as you can see on the y-axis here, is that the purchasing power of one Bitcoin goes up over time. That's the inevitable outcome of Bitcoin's increasing scarcity, is that Bitcoin that you hold grows in purchasing power over time. That makes Bitcoin a savings technology. You put value in it today, and it will grow over time. That's a crazy thought, but that's the reality of the mechanics of Bitcoin's increasing scarcity. So with that in mind, remember, this is where we're at today. Just 1 trillion of a $900 trillion global asset landscape. And if what I said is true, and if that made sense to you, Bitcoin is a savings technology that grows in value over time. Then the question becomes, how much of the world's value might be interested, as they learn about this, in storing their value that's currently in bonds or real estate or any of these other buckets, instead in Bitcoin? So that's why the halving is a huge deal. And yesterday was the most important day in Bitcoin's calendar. It's my favorite day the only holiday at this point that I celebrate. And I hope that you guys appreciate that. That's what just happened yesterday, and today it feels like total non-event.
So okay, so that's that, right? So that's part one of my just like I said, pure mathematical perception of why we're in a bull case right now. Part two of my case, Your Honor, is I think that we have, if you just look at the history of Bitcoin returns, okay, here we are currently right now. Okay, so we're in the month of 2024. This is the halving year. So 2024 was a halving year. 2020 was a halving year. 2016 was a halving year. Okay, so of the halving years, we have so far historically had a green October, November, and December, as well as 2020, October, November, and December. 23 we did, but that's because the news of the ETF being approved got leaked in October, so that got out, had a good, nice little quarter four for people. And right now we're in October. It's currently at 4%, but we still have 20 days to go. I do believe that even if we have a red October, which is going to be pretty crazy if we do, I do believe that November, December will be green based upon history. In addition to that, also, if you look at Bitcoin price during the years of election, which is also the years of the halvings, right? Historically speaking, Bitcoin price has always gone up right after the election. So here you can see this was the election was right here in 2016, and then we had the 2017 bull market. We had the election in 2020, and then we had the 2021 bull market. Here we are in 2024. Election time is right around the corner. Election is like 3 weeks away. We'll be doing full election coverage on this channel too, 24-hour stream. So sit tight and buckle up. That's going to be a good one. And then from here, we're going to see, regardless of who gets in office too, because this is like Biden got into office here, and we had that big run. Historically speaking, Bitcoin does take off after elections, and even back in 2012 as well. As you can see here, that's when Bitcoin went from like $1 to $1,000. Okay, it was like $10, $100 to $1,000. Still good times. All in all, that's my perspective of why I think we're getting ready for having a pretty solid quarter four. To wrap it up, we're going to go to deep tech, deep crypto knowledge expert here, Adam. Adam, you're deep in the trenches every single day.
Sure.
Break it down for us.
All right. So let me share the entire screen. Okay. So quick overview. Not going to talk too much because already Alex went through it. But yeah, we're basically holding this 60,000 level with Bitcoin. We want to see the price hold above it. Just for the 60-day cycles, as long as we keep it over this, we can still have a higher peak after day 30. So right now the peak is around day 20. We want to see a new peak go over this 66,000 price point. I'm personally of the opinion that the price does its own thing, and then outside events get blamed for the price movements. So I expected the Bitcoin price having a downturn around day 30 of the cycle is not uncommon. But of course, people will always try to pin it on something just so that their brain can wrap around the idea of why the price went down. So the explanation for today is this coin. It's called Next Fund AI. So essentially, the FBI made a meme coin back in May of this year to try and catch a couple of influencers who were scamming people. Among those influencers were a couple of crypto hedge funds. The coin traded for around like 12 hours, and the only people who got in were the influencers. I'll show the map in a bit. I was just looking through the code to see, and they really went full degenerate with this. This is one of the templates that I've seen for websites that let you just create meme coins without having to code it yourself. So this includes everything from like taxes, like buy and selling fees, and even like this particular token. So if you sell, a percentage of your selling gets turned into Ethereum and gets dropped into the FBI wallet. So they're not only catching you, but they're also making money from it. So looking at the bubble map, and for those who don't know, so a bubble map is a visual representation of owners of a specific token in this, well, as the name implies it, in the shape of bubbles. The size of the bubble is correspondent to the amount of the supply that you hold. But one of the key features that a bubble map shows is the correlation between different wallets. So it allows you to see if a wallet, for example, this top one, the green one, if a couple of wallets are related. For example, this big wallet sharing some of his tokens and splitting them into multiple wallets to make it seem like it's multiple people, but it's actually the same person. And as you can see in this bubble map, the entire supply is split between like 6 to 7 people with all of their wallets connected, especially this degenerate over here with like 100 wallets, all originating from the same one in the middle.
It's Charlie.
This guy holds like 9% of the supply. So during the 12 hours that the coin was trading, only like $5,000 of volume were made, and it all was through bots. Like in such a short amount of time, normal people won't catch onto a new coin. That is usually bots that have been programmed to just buy everything that gets listed in Uniswap, and these firms are usually the ones behind it. So I was digging deeper into it. So the FBI charged 18 subjects in total, out of which 4 were crypto firms. The biggest one was a firm called Gotbit.
Adam, can you hit Control +++ to make it a little bit bigger? It's legible for the audience at home.
Sure.
There you go. Perfectly. Thank you so much.
No problem. So yeah, Gotbit is a crypto hedge fund, and they were one of the ones charged in this investigation. Early this year, they were accused of selling a token called Water. So they were supposed to be helping the team behind it, like distribute it, but they didn't do that. So what they essentially did was that they just dumped it all. Like you can see how they did it.
Fucking pieces of shit, dude.
And they had the audacity to make a Twitter thread talking about how they, as a market maker, have the responsibility to protect the community. But if you look, the community probably bought at a $1 billion valuation right at the beginning, and then they had a 90% loss over the next like 2 hours where they dumped the price completely. So this is just one incident of how the FBI got onto them, and then they made the coin to try and catch them, and they did. Out of the 18 people charged, already 5 pled guilty. Another 3 were arrested by force. And just to like completely put the cherry on top, the SEC commented on it, and just to show like how detached from reality they are, they said that these crypto firms use algorithms and bots to generate quadrillions of transactions each day. The coin in particular was deployed on Ethereum. And we know for a fact that Ethereum is complete dog shit at handling many transactions at a time. So yeah, not even Solana with the Fire Dancer update can handle quadrillions of transactions every day. So yeah.
Imagine the burn. Ooh, the burn on like 4 quadrillion ETH. Ooh.
It would actually make the price move.
Yeah, it would make the price go up. Yeah.
Yeah, it would. Given there's only 12 million or something of it dicking around, or 120.
Like it was all a complete clown show. Everyone involved is ridiculous, quite honestly. But the best part about it is that I've been looking at Solana, because Solana is right now the meme coin casino. And just as the news broke out, I found like 11 copycats of Next Fund AI, people making just fake versions to capitalize on it, and people actually bought it.
Wow.
Yeah, but how much is bots automatically buying, and how much is actual people like, oh my god, dude?
Oh, 100%. Like the first, like the first buys that are within the first like 5 to 10 minutes have to be bots, because if you've ever looked at Pump Fund, the speed at which new coins get listed, a normal human cannot find a new coin unless they're actually looking for it already. So yeah, but like the volume on it, it's incredible. Like hundreds of thousands of dollars in volume. The coin getting to like 1 million market cap before instantly dumping, and it was just like the whole market is crazy, and that is actually part of the reason I'm still bullish, because people have the sense of humor to do this kind of shit still.
Well, look, guys, it's been a great episode for us today here at the Tokyo Crypto Show. Thank you so much. Be sure to hit a comment, hit the subscribe button, hit the like button. We'll be back next week talking about meme coins. You're not going to want to miss out on that one because we're going to have a lot of data on that. Until then, we'll catch you next time. And when Bitcoin goes up, remember where you heard about it first. Catch you later. Peace out.